Good morning. The Indian markets yesterday ended on a marginal positive note after being up by around 1% in the early morning trade. This was largely led by the banking and the realty and the capital goods sector. After RBI reduced the marginal standing facility rate by 50 basis point to 9%, the bank share surged in the early morning trade. The realty and the capital goods segment followed later, which ended the day around 1.6% and 1.3% yesterday. Metals was the major loser of yesterday after it fell 0.8% yesterday. The US markets once again ended on a negative note following its 8th consecutive day of the US shutdown. The debt ceiling of 16.7 trillion is due to be for further discussion in the upcoming 9 days. Continuing the ongoing problem along with the debt ceiling raising, the global markets are really uncertain about the outcome of the upcoming next week. The US markets and the European markets ended the day yesterday in a fall of about 1% yesterday. Coming to some stock specific and economic news. British telecom giant Vodafone has decided to infuse $2 billion in its Indian arm to raise its shareholding and buy out the minority shareholder stake. This is due to the fact that the Indian operations have doubled its revenues in the last 1 year and has added a revenue of around 10% to the parent's total revenues. The IMF has lowered its growth projections for India and has revised its outlook to 4.25% on Tuesday yesterday, citing weak economic conditions and slowdown in the Indian economy. The Indian markets are expected to be weak for today's session. The Asian markets were trading in a mixed zone in the early morning trade, with the Singapore Nifty being down by around 40 points in the early morning trade. The major resistance and support for Sensex comes around the level of 20199 and 19966 levels, while major resistance and support levels for Nifty comes around the level of 5993 and 5916 levels. Thank you very much and happy investing.